Start minding your own business. Many of us have been programmed to mind other people's businesses and ignore our own. Determine which quadrant you receive your income from right now. Then number 3, determine the quadrants you want to receive income from in the next 5 years. And then there's restlessness at home, there's unease, there's enmity, because we are thinking from the mindset of deficit rather than that of surplus. Hello, family worldwide. What's up? What's happening? Keki me inakwana eka so happy Sunday to us all worldwide. Can you tell us where you're joining us from? Which part of the world? Which time zone? Where are we hosting your beautiful face? God bless you real good. My name remains Dotrop Odum and I'm your host on The Divine Entrepreneur. Today, we're going to discuss a topic titled Start Minding Your Own Business. Start minding your own business. And I'm going to be gleaning from the knowledge by Robert Kiyosaki, okay? His series of books, right? Start minding your own business. Many of us have been programmed to mind other people's businesses and ignore our own. And then we end up broke like a joke and ready to choke as prices increase. Prices of goods and commodities increase, our BPs increase, and then there's restlessness at home, there's unease, there's enmity, because we are thinking from the mindset of deficit rather than that of surplus. So we're going to be continuing the series of financial intelligence, and today we're talking about how to start minding your own business, okay? And this will be very well represented in our income statements. All right, so let's get straight to the board. Yeah, we are now back at the board, and like we said earlier, we've all been programmed to mind other people's businesses. Now, how is that represented in our income statement and balance sheet? By now, I expect that we know how to draw up our own personal income statements and balance sheets. Okay, that's so important, so you can know how to gauge your financial status. All right, just writing out your income statement alone will reveal things to you that you may not have captured because they are all up here. Now, writing it out is so important. Okay, so right now we're going to draw our income statement and balance sheet, and how exactly it is we have been programmed to mind other people's businesses. Okay, so this is my income statement. Yeah, income statement. Okay, by now we should all be experts in drawing up income statement and balance sheet. Okay, that is the whole idea. Financial intelligence is so important for the divine entrepreneur, for the child of God. All right, now this income, we have our income as usual, expenses, assets on this side, and what? Liabilities. Okay, so in the income, under the income column here, this is where you mind your boss's business. This is where you mind your boss's business. This income section is your boss. This is the section for your boss, right? And here under the expense column, this is where you mind the government business. Government business. How? By taxes, by payment of tax, right? Also, every other expense where you mind a lot of other people's business. This is where you manage other people's business. How? When you pay bills to them, when you buy clothes, buy shoes, buy commodities. Basically, money is flowing out from your pockets, either to the government or to other people. Do you understand? Now, this is where you mind your bank's business. Yes, so this is where you mind your bank's business under your liabilities. Why? It's predominantly loans, long-term loans is what dominates the liabilities section of our income statement. And of course, this assets, what is your business? How many of us have been minding our business? How many of us are paid for stuff? Do you understand? How many? The mindset of many of us in terms of cash flow is to be spenders. Especially in this part of the world. We are so used to spending and spending and spending. We never have the mindset to be the one that is on the other side of the receipt of cash. So Robert Kiyosaki was making an analysis one time. He said, when you're going to a football match, for example, football fans in the house, make some noise. Arsenal, Gunners for life. Yeah, my dad is an Arsenal fan, so yeah. I'm not a football fanatic, right? But I see there's a lot of energy in that space. Amen. So when you go to the football match, when you go for a football match, make sure you are the one that's collecting the money that is being paid for tickets. Make sure in any field you find yourself, at a wedding party, the party will be more interesting if you were the event planner that they paid to plan that party. Are we communicating? Make sure you always find yourself delivering so much value, solutions to problems, that you are the ultimate, your bank is the ultimate one that money flows into. It is time to start minding your own business. And what is your business? The asset column. Nothing more. The asset column is your business. The fatter your asset column, the more it shows that you are minding your business, and the more you get on the road to financial freedom. So what are the steps? What are the steps to take immediately? What are the steps to take immediately? Number 1, fill out your own financial statement. Fill it out. Yes. What makes up your income? What makes up your expenses? Fill it out honestly, practically. What makes it up? What makes up your asset column and your liabilities column? What makes it up? Right? So step 1, right? Let me write it for the sake of those that love to write. Yeah. Take action. Take action. Take responsibility. Number 1, fill out your account statements. Fill out your own account statements, right? Step 2, set financial goals. Okay? Set financial goals. Set financial goals, all right? Now, so this, under setting financial goals, you can give yourself a 5-year goal, for example, 5-year goal. Tell yourself, where do I want to see, what do I want to see in my statement in 5 years, right? And then of course, 1-year goal. What do I want to see my statement in 1 year? Right? Now, using your 5-year goal, rewrite your statements, your financial statements, right? Rewrite it all over again using your 5-year goal and compare it to your current financial statements. Okay? Do that. Put them side by side. I'm sure we understand that, right? What would this do? This would make us think. This would make us write stuff down practically. Now, having written your financial statement, both the 5-year financial statement and your current financial statement, you can now go to these steps. Okay, we'll outline some other steps you need to take right about now. Right? So review them. 1, review the statements. Review the statements you just wrote. 2, determine which quadrant of the cash flow that you receive your income from today. Which one do you receive? Determine which quadrant you receive from. Yes, determine which quadrant you receive from. Remember, for the sake of those that are joining us for the first time, shout out, I love you, right? This is our cash flow quadrant, okay, where we have our E for employee, S for small business, B for big business, and I for the investors, right? And then we know that on the left side, those on this left side of the quadrant work for money, while those on the right hand side of the quadrant have money work for them. Money works for these guys work hard for money. Okay, so now determine which quadrant you receive your income from right now. Determine it. Okay, then number 3, determine the quadrant you want to receive income from in the next 5 years. Yes, which quadrant do you want to receive from in the next 5 years? Write it down now. Write it down. Okay, then number 4, you now begin your cash flow management plan. Okay, begin your cash flow management plan. All right, begin your cash flow management plan. I trust we understand this very well. Now we're going to close today with a picture of what your cash flow should be, what you should work towards, what your cash flow statement should be. Now we know our income statement versus balance sheet. We'll be doing it for a couple of weeks now, and I'm sure we're already getting familiar with the items there, right? If you haven't, let today be the first day, right? Nobody will help you out of your own situation. Nobody cares about you as much as you do, right? So take responsibility and let us stop being like Adam and Eve, who blame every other person for their problem. Nobody is your problem, okay? So discipline yourself enough to do these exercises that we are teaching you, all right? Now I'm going to close with this. How should the cash flow statement be? How should your cash flow statement be, right? To be financially free, right? We're going to break this down now. It's a very interesting diagram, okay? So this is what my standard cash flow should be. This is what my standard cash flow should be, right? Now, like I said, we all started from the E. All of us started as E's, right? Before we now, now many of us based on learning and financial education, and then the situation of things, right? When we know that take-home pay is not taking us home again, okay? Many are now trying to learn how to move from the left-hand side of the quadrant to the right-hand side and be financially free, right? So let's say now you start with your what? Salary. Okay? Salary plus passive income. Okay? Salary plus passive income should be equal to total income, right? Salary plus passive income equals total income. Then minus, okay, let me make this a bit more. Okay, let me start from up so that the board can accommodate it more, right? So this is my cash flow. Okay, so I have, let me just draw all the boxes here. 2, 3, 4, and 5. Yeah, these are 5 boxes. 5 boxes that represent what my cash flow should be now. So this is my salary plus passive income equals total income. Okay, then minus total expenses. Minus total expenses is equal to what? Your what? Monthly cash flow. Do we see that? Your salary plus your passive income equals your total income. Okay, meaning if you are working right now as an E and then you have passive income, maybe income from royalties or other sources of income, like maybe rental income, real estate income, etc., right? And then minus your monthly expenses, right, equals your monthly cash flow. So you should always check these amounts, right? Now, when the 2 points of focus are this passive income, right, and total expenses. Once your passive income exceeds your total expenses, then you are out of the rat race. Okay, you are out of the rat race. So digest this, feed on it, and then we'll continue from here next week. Okay, don't forget to join us every Thursday and Sunday by 7 p.m. WAT. Right, on Thursday we drop professional videos, right? And right now we're still in a series of Amazon KDP from scratch. So if you are a self-published author or you want to know publishing things, right, invite your friends, invite your loved ones. Until I come your way again next week, it's bye from me. I love you, but God loves you more.